So what might be the difficulty if you want to go and buy a business that has about a $500,000 a year EBITDA? Let me tell you a story. Hey there, it's David Barnett from davidcbarnett.com, the blog site and associated YouTube channel where I talk about buying and selling businesses, local investing, managing small businesses, entrepreneur wealth issues, and anything else that people want to ask me about. I had a very interesting conversation with a viewer in the Chicago area who is actively looking for a business that generates about $500,000 of EBITDA revenue. So this is the cash flow after he's paid. So he's retiring out of a big level executive C-level job. He's got money. He's looking for a really good business that he can build into something truly worthwhile. And he's having a little bit of problems. And the problem that he's having is he keeps getting outbid. And it seems like everyone else who's trying to buy these businesses has more money than him. So I want to tell you guys what I told him, because I think it's an interesting story, especially for people that are interested in business. $500,000 of EBITDA revenue is actually a magical level. It's the level of revenue in a business that attracts what we call the PEGS and the PEGS, the private investment groups and the private equity groups. Because once you get to $500,000 of cash flow, all of a sudden the business can support a new level of overhead or guidance or governance, if you will. So here's the business plan of some of these private investment groups or private equity groups. What they do is they target an industry that has a lot of diverse ownership. So for example, car washes, okay? And they'll find a really great car wash in a big metro area, a place where there are a lot of other independent car washes. And they'll buy the car wash and they'll invest a ton of money into making it really special. They'll rebrand it, they'll make it look and act like a franchise, they'll put a ton of money into marketing and advertising. And then what they will do is they will go around the area where there's a similar media buy, so within the same radio area or television market, and they'll go around and they'll start buying up other car washes and they'll rebrand them to this new brand that they have. And what they're doing is they're creating a chain by buying up existing businesses where the customers and the sales are already there. And ultimately what they want to do is they want to build it from having, starting off with $500,000 of revenue to something that has several $1,000,000 of revenue. And the ultimate game plan is to then sell it to somebody else as a big package or to bring it to a junior stock exchange. So why would that make sense? Well, here's why. It has to do with multiples and valuation. So in the world of small business, we often talk about 3-4 times multiples of cash flow being a price that people will pay. But in the stock market, you're up like 8, 9, 12, 15 times, depending on the type of business and the growth that's associated with the business. So by pooling together a bunch of small companies that you paid 3 times earnings for into a bigger company, and then you sell that for 6 or 8 times earnings, you can make an incredible profit. You can like double your money. And so that's why this guy is having a hard time, because he's a financial buyer and he's playing in a pool full of strategic buyers. And the strategic buyers have this long-term view and they can see this huge profit at the end of the day that they're able to pull off because they've got the money behind them. They're probably buying a lot of these businesses and just paying cash, like they've got investor money behind them. So what I advised him to do was actually to set his sights a little bit lower. And because he's right on the threshold of competing with the big boys. And by setting his eyesights a little bit lower for slightly smaller companies, he can find something that's still good, but not big enough to attract those pigs and the pegs, but still something that he could probably build into a company that he could, if he wanted to, sell to a pig or a peg. Anyway, if you're not on my email list, you should be, because email subscribers get the videos first, and any special offers or deals or notices about any kind of upcoming events. So May the 10th, I'm coming to Toronto, for example, and you can find out more at the blog site, davidcbarnett.com. There's a link to my Eventbrite page where you can buy a ticket, and it's extremely cheap. So if you're in the area, you should go, and I'd love to see you there. Anyway, keep the questions coming, and don't forget, if you ever want to have a chat with me, easiest way to get a hold of me is my clarity.fm/David Barnett page. And if you go check it out, you'll see all the kind reviews that people have left from all the different phone calls I've had from all over the world over the last several years. Anyway, thanks a lot, and we'll talk to you soon. Bye.